Good afternoon. This is GIG Investment Show. My name is Oleg. Here's my colleague Dmitry, and today we are going to discuss the IPO of the Russian company Softline. Provider of IT solutions Softline has officially summed up the results of the IPO, following which the company will raise $400 million. The offering price was $7.5 per GDR, the company said. This corresponds to the lower end of the $7.5 up to $10.5 price range announced on October 18th. In fact, the price was determined on Monday, when investors were informed that the placement is likely to take place at the lower end of the range. The company's capitalization, based on the placement price, is $1.5 billion. Softline, as expected, attracts $400 million by placing 53 million GDRs. The funds raised are planned to be used for M&A and general corporate purposes. Earlier, Igor Borovikov, the founder of Softline, announced that the company plans to enter the market of 13 new countries in the next 3 years. So, for me, that looks like a very good and interesting opportunity for investors. And Dmitry, here is a question for you as you delved into analysis of this IPO. In its IPO investment presentation, the company claims that its growth is strong and actually exceeds target market growth. Its EBITDA is on a steady growth track and reached 52 million in 2020. Seems like a strong, fast-growing growth company, isn't it?
Well, yeah, it seems like that, but let's take a closer look at the company's financials. Actually, its reported revenue for the full 2021 and the financial year of 2021 ended on the 31st of March 2021 was $1.5 billion. EBITDA on a non-adjusted basis was $40 million, which is 2.7% of total revenue. As you correctly pointed out, its rate of growth is really strong. It's like 26% cumulative average growth rate over the last 4 years. And in the 3 months ended June 30th, 2021, revenue grew 27%, which is pretty much in line with their historical average growth rate. However, the quality of this growth is a concern. We look at their operating profit and compare this to revenue growth in the period of 2019-2021. And we see that the operating profit growth actually lags behind revenue growth. So in 2021, revenue grew 34% versus 2019, but operating profit increase was only 28%, which is below actually the top line growth. So, and this is a concern as it raises questions as to the company's ability to actually find good projects with good IRR that not only help grow its top line, but bottom line as well. I'm looking here at like their financials reported in the IPO prospectus, and according to the results of the 2021 financial year, the company received a net loss of $2 million, which was due to the claims by the tax authorities, so which recalculated taxes for previous years. And it is unclear what the profit dynamics were actually before 2019. There are no consolidated statements of previous years on the company's website.
Okay, well, interesting. So they do not say anything about debt in their IPO presentation. And I assume this is not a problem for them. What do you think, Dmitry?
Well, I would say that it's not a problem. According to their financial statements, total debt is $249 million. They also have a cash position of 77 million. That's as of the 30th of June, 2021. It's so with cash position and total debt, their net debt is 172 million. So net debt to EBITDA is 4.3, which is rather high, I think. However, of course, we might think that after the IPO, with all the money they get, I mean, some of that debt will be discharged. Some of it, not all of it, but at least part of it will be paid off with their IPO proceeds.
Okay, and speaking about the IPO, I understand that it's all cash in. Existing shareholders are not selling their stock. They stay in the capital, yeah.
Well, let's take a closer look at the shareholding structure before and after the IPO. So before the IPO, I mean, 77.6% of the company belonged to Softline Group Incorporated, which is actually controlled by, I mean, Mr. Borovikov, right? The key founder of the company, key shareholder of the company. 12.8% belongs to Da Vinci funds, and then there are other shareholders, right? So the existing shareholders share immediately after the offering will be reduced definitely, as they're issuing new stock, but they do not seem to be selling their stakes. I mean, their equity stakes are not reduced immediately after the offering. However, they also have over-allotment option. And if that one is exercised in full, then the existing shareholders will sell up to 15% of the base transaction volume. So that is up to 8 million GDRs. Selling shareholders and Softline from the moment of admission to trading will undertake not to sell the company shares for 180 days, and lockup for top management is 360 days. But I guess after 180 days, existing shareholders will sell some of their stocks. So you were right to point out that after the IPO, existing shareholders will still remain shareholders, although, as I just said, they will have an option to partially reduce their holdings.
And how are they going to spend the IPO proceeds? It's $400 million. Even if they pay off some of the debt, there will still be plenty of cash left.
They say the funds raised are planned to be used for M&A and general corporate purposes. Earlier, Softline founder Igor Borovikov said that the company plans to enter the market of 30 new countries in the next 3 years. So 30 new countries in the next 3 years. This is probably good, right? Geographical diversification is a positive side of their business case. Russia's share in the turnover is 55%. The remaining revenues are mainly represented by Asian and Latin American countries. However, we should bear in mind that in 2020, only the Russian segment turned out to be profitable. And among other regions, Latin America looked worse, where the net profit margin was a negative 5%. So the Asian market was also negative.
And Dmitry, regarding the IPO, what is your take on the company valuation metrics? Is it a good value for the money, if we can say like a good value?
Well, I don't think it's a good value for the money, right? Because look, they have EBITDA of 40 million on a non-adjusted basis. Market cap is 1.5 billion. So we get a trailing EV/EBITDA multiple of 42, which seems too high for the company's, given the company's low profitability and the risk profile.
Okay, let's talk about risk as a part of the valuation. What should investors be watching for about this company?
Well, I'd say, regarding risks, I would say there are many. They claim that they are an IT integrator, right? An IT services provider. However, Softline mainly resells software, which is a low margin business. We remember that their, EBITDA margin is only 2.7%. So, if you compare that, for example, to like retail, for example, operating in Russia, like X5 or, let's say Lenta, for example, right? Their EBITDA margin is way above this, 2 or 3%. It's like 7, 8, 9%. So these guys are distributors, low margin. It's a low margin business, right? So, and the share of services is in fact negligible in the total revenue. It's just about 5%. So the company distributes licenses for Microsoft, Cisco, Google, Oracle products, actually earning a commission on their resale. Can it grow over time into a services integrator? Well, such a path does exist, but we should bear in mind that it's not easy to turn from a reseller of software into an integrator. These are absolutely different business models requiring different competencies. And there are significant concentration risks too, like 48% of their revenue comes from distribution of Microsoft products. And also other American vendors also account for a big share in the revenue, like in their revenue mix. So just imagine what happens if like some, sanctions are put in place and they lose Microsoft as their customer. And it's 48%, it's more than half of their business actually, right? So if in one day this chunk of their business goes away, then, how will their business look like? So the company is also building up debt to acquire businesses around the world. For example, a major Indian distributor of Microsoft MB products was bought earlier this year. But our concern is, can they really make value accretive acquisitions? So far, the jury is still out there whether they can do that. And in Russia, further business growth opportunities are limited. And finally, it is inexplicable why a company entering an IPO pays dividends. If a company is turning in like a profit, a significant profit, right? Then it's, quite understandable. But Softline didn't turn in a profit actually in reported year of 2021, right? They reported a loss. So at the same time, at the beginning of the year, the company returned money to shareholders, paying dividends in the amount of $10.2 million. So dividend yield is not very big, just 0.6%. But still, why pay dividends if you have a loss on your balance sheet?
Well, Dmitry, not as good review as I expected. So let's sum up. What's your verdict?
Well, I would say we see the desire of the existing shareholders to sell Softline at a much more expensive valuation than the business is actually worth. It is a low profit company with noticeable risks and high debt burden. So, it's not suitable for our portfolio.
Thank you, Dmitry. Well, Now you saw our overview of the IPO of the Russian company Softline. So take your investment decision reasonably and see you next time.
Bye, and thank you, Oleg.